Getting close now, guys. The week on the road to Inauguration Day. I say it's going to be one of the biggest weeks within the crypto space. I say it's going to be one of the most volatile weeks within the crypto space for years. So we had that big dip on Bitcoin below 90,000. We had a break, we had a close on the daily, and then we had a recovery bounce. So you can see that on this weekly candle here, all the way down, 88,940. Now we've recovered, currently sitting at 97,203. So that's a positive bounce from Bitcoin. But this is what I really want to be showing you. Total 3. Now, everybody that's been watching my channel know that this is my thesis. Once we get a break, once we get a close of total 3, I'm using a 10 to 12 week period to start scaling out of my crypto positions. So I'm going to be doing that fully transparent in front of you guys. And also, we've got the dominance. Dominance has actually been rejected from this wedge. If we get a rejection from this wedge, expect an acceleration to the downside. Once you get a break in dominance and acceleration to the downside, that is the start of alt season. So I've got all your alt requests. It's going to be a big show. Let's dive in. Okay, we'll get to your altcoin request very shortly, but firstly, we're going to talk about Bitcoin. What needs to actually happen on Bitcoin for us to confirm a new high and for us to continue the rally? Because ultimately, when you get alt season, Bitcoin will start rallying, altcoins will start rallying even harder. So that's what we want, guys. We want an acceleration in altcoins, people coming out of Bitcoin into altcoins, people coming out of dollars into altcoins, creating that surge and creating that confidence in the market. So Bitcoin, we'll just jump into the daily. Bit of a lie that I told you. We didn't get a break and we didn't get a close. We got a candle, extreme wick to the downside, which hit 89,000. Then that was bought back up, guys, creating a hammer candle. So the hammer candle's a bullish candle. We wiped all of the session at one point to the extreme low, down to the 89,000. And then this is a positive thing. This is the buy up candle by the bulls. And then that's followed by 2 green candles. So the daily is looking strong. We've held that support. We need to worry if we actually get a candle close below the 90,842, then you'd expect the acceleration to the downside. That acceleration to the downside is all the way down to 70,000. All the way down to 70,000, so 71,886. So the reason why you expect that volatility if you get a break and a close, it shows that there's weakness from the bulls. The bears have managed to push price all the way down here. They've closed the session at the end of the day. What's that done, guys? It's taken out that higher low. If you take out the higher low, expect a trend reversal. If you expect a trend reversal, you need to look left. Can you see any build up of price action between this level here? Can you see anything like that? Any flags? Any kind of accumulation? No. So what happens when you've got a lack of a build-up of price action like that? You would get an acceleration to the downside. 9 times out of 10, you'd get that acceleration to the downside because there's no build-up of price action to fall back on support until we get to this support level here, which was resistance for such a long period of time. So that's the caution, guys. That's how we need to be cautious on Bitcoin. That's the key level, 91,000. Do I think we'll get a break? Do I think we'll get a close below 90,000? It's possible, guys. But the sentiment moving into the next 5 days, it needs to happen quick because I think that Trump is going to announce some positive policies within the first couple of days of inauguration. That's my thesis anyway. Right, back to the weekly. So this is what I've been talking about, guys. The break and the close of total 3. We've created a bull pennant at the moment. How would you play the bull pennants? Not that you're going to trade the total 3, but this is the indication because this is the total crypto market cap excluding Bitcoin and excluding Ethereum. So when you get a surge in total 3, that's signaling everything is going into the crypto market outside of Bitcoin, outside of Ethereum. And we want this flag to break to the upside because once it's broken to the upside, we're halfway there. We only need 17.6% to get a break and close of the previous all-time high of total 3. Last time that happened, guys, it was down here. And this is how I calculated it. There's the previous all-time high. There's the break. There's the top. 13 weeks. So you've got 13 weeks and then you get the volatile pullback, guys. It doesn't need to happen the same as the last cycle. It could happen the same as the last cycle, but we need to be asking ourselves, are we going to get a mid-market dip? Because I'm preparing for a mid-market dip. If it doesn't happen, it doesn't happen. But this is what I'm trying to capitalize on, guys. This bit here, not this bit here. So that's my strategy. Break, close of total 3, scaling out over 10 to 12 week position. If it tops out after 10 weeks and then it pulls back, that's tough, guys. That's the aim of the game. We can't pick tops. We can only prepare to take money off the table when the market gives us. And unfortunately, guys, during alt season, it's a limited amount of time that you get for those parabolic runs because the market can't sustain itself. Market gets over leveraged, market needs to pull back. And often at the end of the market, you get a volatile crash. So don't think that your cryptocurrencies are going to go over the moon constantly over the next 3 to 5 years, guys. You will get a nasty crash and it will hurt hard. So make sure you've got an exit strategy. Make sure you're thinking about how you're going to be scaling out, is what I'm saying. So we've been following this. We've been following this for years on the channel. This is the Bitcoin dominance. We've been in this ascending wedge. We've seen weakness when we've broken below the ascending wedge, and then we've come back down, we've retested, and we're currently rejecting off that. So the thesis is, guys, we're looking for this move here. That move here is going to signal a big surge in altcoins. That's actually going to drop dominance for Bitcoin from where price is now, 18.04%. When you think of a market cap like Bitcoin with trillions of market cap, 18.4% is a huge amount. So that's how I see that the alt season plays out. Number one, part one of alt season. What I'm going to do is I'm going to bring in my moving averages. And what you can see, and this is the weekly chart, guys, what you can see is the 200 weekly moving average. Now, the 200 weekly moving average carries so much weight behind it. Every time that price hits the 200 weekly moving average, expect a weekly moving average, expect a volatile reaction. You often, or you don't often, hit it and break straight through it. So I'm not expecting that to happen. So we've got this previous build-up of price action, which was resistance once, resistance once, resistance once. Now, does this make sense to you? That this is going to be the first level that we come back down and hit. If we come back down and hit this first level, expect stagnation within the crypto market. This could work out, guys, around March, April, May. That works out March, April, May. That's going to give me more thesis that we're going to get a reaction at the halfway point. That's going to create a stagnation within the market. That's going to create indecision, and it could create a pullback within the market at some point. So I want to take this move here, guys. I want to capitalize this move, and this is going to be the main part of my bull run. Once I've capitalized out of that move, I'm happy to leave a small amount in, and I'm happy to add a small amount from the gains that I've taken before, a small amount. I want to keep these gains, guys. So I'm going to be taking a small amount once we get a break of the weekly, after you get something like this, or the probability you get something like this. Then you get a drop to the next support level all the way down to 42%. So that'll be leg two of alt season if it plays out this way. This is just hypothetical, guys. This is how I think it's going to play out based on what we've got here. Strong resistance, weekly 200 moving average. Expect a volatile move to the 200 weekly moving average and this previous resistance, which we would expect to flip support in the first instance. Then total market cap, guys. You can see when you look at the total market cap, one thing, this includes Bitcoin, it includes Ethereum, and we've got a break, we've got a close of all-time high. So when you look at total three, take Bitcoin and Ethereum out, we haven't got a break and close of all-time high because they've stimulated the total market cap with their additional liquidity. So it's a higher market cap with total, including Bitcoin and Ethereum, they make up about 60% of the whole of the crypto market cap at least. So that's why they make a difference, and that's why I'm looking for total three, because I'm mainly in altcoins, guys. My main position is in altcoins. I was in Bitcoin. I've transitioned over the last couple of years into altcoins. So I'm in high risk at the moment. I want to make sure I capitalize on them gains. And that's one way that I'm intending to do that. So the Dixie, strengthen the dollar, guys. We want a weak dollar for strong crypto. And you can see that the Dixie's got a bit of a recovery here. We've broken this previous resistance, slightly tested it as support, but ultimately we need the dollar to start getting weaker. This is against a bag of fiat currencies, guys. This is not against crypto. This is a bag of the pound, Japanese yen, the main one's the euro. So this is the strength of the dollar against the fiat currencies. And we don't want to hold this support. We want to drop this support. That's showing weak dollar, guys. Just remember, when the dollar's weak, lots of things are strong. So remember that. If you see a weak dollar, then look at other markets because that's where you get more gains. Now we're going to be looking at some of your altcoin requests. So we're going to start with AI16Z. Now I added this to the Bullseye portfolio in the Discord group. So get yourself in the Discord group and you won't miss any of the ones that I'm adding to the Bullseye portfolio because the build phase is over. This pulled back to $1.01. I added the position. I told people beforehand I was adding at $1.01. Some of the guys in the Discord group replicated that, and now that's up 32% on the last couple of days, guys. So AI16Z, as far as analysis is concerned, we've got nothing to go by. We've got a diagonal trend line. Use that as your momentum. If we drop that momentum line, expect price to go lower. So back here, guys, at this $1 on this support line, This is where we got the entry. It's only $50, guys. I was using the bullseye portfolio as a side portfolio as an example to show you guys exactly what $50 here, $50 here, $50 here can do. That's up around about 30, 40% now, even though we haven't confirmed an alt season. So not much data to go by on there. Look at Chainlink next. So what have we got on Chainlink? This is the 382. So this is the previous all-time high on Chainlink. That sits at $53.31. We've pulled back on Chainlink. We've breached the 38.2. Now, a lot of things haven't breached the 38.2. Chainlink has, however, it's pulled back. So what we're doing now is we're taking the fib from its previous swing low. This is the lower time frame swing low. And then we're taking it up to this swing high. So the pullback here is the 618. So this is when we pull back, a likely place to get a sticking point. 61.8 here, sitting at $16.81. Aim of the game is to get a break and a close above this 38.2% retracement, which is the more macro retracement from its previous bull market all-time high, $23.28. So if you see something like this, guys, start recovering, you can add a trend line on here. If you get a break above the 38.2, that's giving you additional confirmation that the bulls have got momentum, and then you can protect yourself below here. And then that's reducing your risk to reward. So we just pull up the stochastic. You can see indicators are starting to reset now. This one's not quite there. Stochastic's not quite there, but the indicators are starting to reset on a lot of these. Polkadot. Look, Polkadot's in a range now. It's in a strong range. It's been in this range for a long time, all the way since back in May 2022, which is 980 days. So the first thing that we need to do is break and close above $11.15. Now, once we break and close above $11.15, this is the gap here. That gap is actually an increase in price of 100.42%. So these moves don't look very good, very big on a chart that looks like this. It's been absolutely battered by a bear, and it's been in a strong accumulator phase for nearly 1,000 days. Once you get that break, you get the surge. Why do you get the surge? Clues look left, lack of build-up of price action in this area. So you've got all this price action here, because it's been rejected. If this breaks, you would expect with a high probability that this is going to come back and test support. So what I'm saying on Polkadot is if you broke and close at this level here, it's nearly the same level as what it is at resistance here. So wait for the confirmation buy on there. The other way that I'd play this is if we manage to get a pullback down to this support level's held once, twice, 3 times, 4 times, 5 times. Expect that to hit once again if it comes back down there. Because it hasn't breached that before, why is it going to breach it again now, guys? We've got a strong build of a price action here, which is going to support us going forward. So that's Polkadot. AIOZ. So AIOZ, what we've got here. So what we can do on this is we can do a fib from this low here, and we'll look for any hidden pivot levels to its swing high, back down to its swing low. What do we need, guys? You tell me, what is it that we need? We need a swing 3, which is higher than a swing 1. So this is swing 1, this is swing 3. For swing 3 to be higher than swing 1, we need to breach the 1-to-1 equal measured move, which is sat at $1.37. Now, what you really want in this instance, guys, and this could be an extension of swing 3. This doesn't mean that swing 3 is over. If swing 3 is over here, that's weakened. However, we're creating a bit of a pennant here. So what potentially could happen is a break above the pennant, and then to come back and test the 1272 here. 1272 sat at $1.66. So that's how I'd play that, guys. You can add a trend line onto this bull pennant, break to the upside, protect yourself back in the pennant, reduce your risk to reward, and then 1272 would be my next target on that. Destra Network. Now you can see on this one, this is a strong one. So we've had resistance, and these are difficult, guys, because we've got limited price action to go by. When you're a technical analyst, this is a nightmare to try and analyze these type of trades. So rejection. This is the weekly time frame. This is higher time frame. The higher the time frame, the more weight it carries. You've broken through with some velocity. You've pushed up from trend all the way up 77.87. Then what's happened? You've pulled all the way back down. What happened, guys? What is previous resistance? You would expect to flip support. So we had a big support bounce off here, and now we're currently trading at 36 cents. So if you can get price back down to this level at 30 cents, that'd look good to me. But you can see each time that it comes back, or this time that it come back, it got bought up by the bulls. So that's showing strength, guys. If you're getting bought up by the bulls at a key support level, that's signaling that's a good level to buy. Next one, Velo. This is one of the big ones from None the Wiser in our Discord group. So Velo, see what we're looking for here now. We're creating a bull flag, and we've got the high here. That's the high close. This is the extreme high. So what you're looking for is a break and a close above and a retest. So a break above here, come back down, retest this level of support, 0.035 cents. And then I'd be interested because we're at resistance now. Who buys resistance? You could buy the break. Buying resistance, you've got a higher chance of pulling back at some point. So support, guys, is a lot of the time exactly the same price as what resistance is. However, once you've got the momentum that you broke above a key level, you broke above a resistance level, that would expect to flip support and give yourself higher conviction at exactly the same price. ICP next. This is one that I haven't talked about for a while, actually. This is looking not too bad. It's looking not too bad. Let's zoom out on ICP and just remind everybody where this thing went before. This thing went before 2,824.667. Is it going to break? Is it going to close above all-time highs? It pretty much 99.99999% isn't going to break and close above all-time high. It's not going to happen, guys. So what we're looking for is different key levels. And this is the key level that I'm looking for. You can see this big extreme wick. This is the weekly, this big extreme wick. And I remember when this thing launched, absolutely battered, absolutely battered. When everything else was going up, this was going down. And it was dodgy tokenomics at the time, guys. Does it mean that it's crap? No, it's got real good fundamentals built into this. It's got a strong team and it's got strong backing behind it. However, wasn't very good what happened last time. So as far as I'm concerned, this is the high, $244.43. Do I think we can break that? Potentially. However, prepare not to. So let me just sort this chart out a minute so I can get the scale right. So this is the level that I'm looking for. Let's build in some key levels on ICP. You've got this, $79. That's going to be a strong level. And then you've got the 254. Let's pull that down. Call it 250. So these are some key levels here. What I'm going to do is I'm going to use a Fibonacci from this conservative high here, and then we can look for sticking points in the market. So here we go, from the swing high all the way to its bear market low. All the way to its bear market low. What's the first area that we'd be looking for? It's the 382, guys. We're looking for the 382 and we're looking for the 618. So from where price is now to the 382, 204.17%, guys. ICP doesn't look bad at the moment when you look at that. It's been a long accumulative raise. It hasn't breached its bottom here. So that's looking pretty strong. When you look at the downside there, 56%, upside, what would we say, 200 odd percent to the upside. Now to the 618, 374%, and then the 786 all the way up here at 500%. One thing that we need to be mindful of, one thing that we need to be thinking of is time in the market, guys. If it doesn't run when the rest of the crypto market's running, when total 3 is well on its way, it's in week 3, 4, 5, 6, 7. These things aren't holding these key Fibonacci levels. You need to be rethinking your strategy and start taking out a little bit earlier. If your key levels don't hit, just make sure your bank profits along the way still. It's hard to keep the money, guys, because the mindset that you're going to have when you're in a bull run is you'll have, for example, $1,000. You wake up the next day, it'll be $2,000. You wake up the next day, it'll be $4,000. That's when you get complacent. That's when you get overconfident. When you keep thinking that it's going to go up and when it starts feeling bad to take things out of the market, that's probably the best time to start taking things out of the market. So what's this? Moodeng. This is another one from None the Wiser. Moodeng. So really difficult, guys. The only thing that we can do is stick on a diagonal trend on here. Stuck on a diagonal trend, you've got to wait for the break. Once you get a break, ideally, you're looking for a close, which would test this bottom here, create a double bottom, and then that'd be a better buying opportunity for me. So 18 cents, but after the break, guys. We're at there now. 18 cents after the break is when I'm interested. NPCS, I'm invested in NPCS, guys. It has been absolutely battered. We managed to get this move. This is Benton from the community that's shouted this one out. We managed to get this move here, which was, we got it all the way down here. This was a move of 634%. And now, price has pulled all the way back down, 0.08823, which is 79% to the downside. So we've dropped the 786, and this is going to be the key level that we need to break and close above, the 786. So what I want is, I want a recovery candle here at the end of the week. And if we get something that looks like this, if we get a wick that pushes price back up to the 786, that'd be bullish for me. Then you've got your trend line. Then you're waiting for the break. That's more confirmation that the bulls have got momentum. But not just that the bulls have got momentum, that you can protect yourself with a limited amount of capital at risk. Right, Ether, can't even comment on this one. Let's go into the daily. It's just broken. I mean, this is on the, what's this? This is on the Mexi chart. So one thing that you need to think of, guys, when you're looking at trading patterns, each exchange has got different pairs. Each exchange has got different prices. They're all very similar, guys, but sometimes their launch dates are different. So what I'm saying is 30th of December 2024, this is when Ether was launched on Mexi. It might have been launched on something decentralized before that, so there might be more chart data to go by. But looking at this, unfortunately, that's pretty weak. It's pretty weak. We need a break and we need a close above 0.00263 for that to start turning bullish. Again, you can stick a diagonal on there. You're on the daily. Stick a diagonal on there. Wait for the break. Once you've got the break, let's give a momentum to the bulls. We've got no indicators on there, guys. There's no analysis to go by. What's this? SPAR. I'm not sure who asked for this one. SPAR. These might be the disaster coins. I put out a poll saying, chuck me your disaster coins, and then we could see whether a recovery is likely. I think this might have been one of those. So, SPAR. Let's have a look, see where this thing's been before. Right, it's all-time highs, 0.244308. So the fib from its previous all-time high to where price action is now, the 32 or 38.2, sat at 0.95231. So that is an increase. That's an increase, 537% just to its previous 382. So when you're talking 618, guys, you're talking the big 618s. Remember, time in the market all the way up here, nearly 1,000%, 996%. So if this starts running slowly, is what I'm saying, if this starts running slowly during the course of the 10 to 12 week period that I'm giving myself for alt season, then I'd be reanalyzing that. And if I was potentially targeting the 618 and it was nowhere near the 618, potentially I'd be switching to the 382 for taking profits. Let me know what your exit strategy is, guys. Remember, dollar costing into the market during a build phase. I've been drilling home and drilling home and drilling home on that channel. It's the most important thing. But are you prepared to start doing exactly the same thing? You're doing exactly the same thing, but you're scaling out during the bull market. So it's not time in the market, guys. We can't time tops. We can't time bottoms. It's about time in the market. Are you there during build phase? Are you accumulating during build phase? Are you exiting the market and distributing during the alt season? So Hashai next. Let's have a look at this one. Stick a fib on there from its low. See if there's any sticking points. Is there any sticking points? Look at this, guys. Magic 618. Magic 618 once, Magic 618 twice, Magic 618 three times. Not only that, each time that we've breached it, the bulls are bought back. You can see that by these extreme wicks. So simple, guys. Trend line. We're looking for a break. Once you've got a break, that's giving you momentum. There's not much price data to go by. There's a couple of ways that you can play this. If you come back down and test this 618 again, I'd allocate a small amount of my position in there. So if I was splitting this position into 4 times, just say $25 a time, $25 a time, I'd add $25 here. If we pull back to the 786, I would add another $25 there. Once we'd broken, I would add another $25 there. And if we get a retest, I would add another $25 there. What would that do to my average? I'd bring it around about here. So that brings your average in trend. Now, what happens if it pulls back down to the 618, drops to the 786, and then drops down even further? Would you keep would you keep adding to your position? Because this is where you start adding your position into negative. because we're looking for confirmation. If we drop the 786, unfortunately, guys, the best place from a trading perspective is to put your stop losses under the 786, stop yourself out with a limited amount of capital. And that's the aim of the game, guys. When you're actually trading with inside trading patterns, that's the most difficult thing, because you don't know whether it's going to break to the downside or break to the upside. And if it breaks to the downside, unfortunately, you're risking a lot more capital than what you would be if you waited for the break, the close here, retest. That's the ideal one, guys. The break, the close, and the retest. That's the closest to in trend that you're going to get. So the closest to in trend that you're going to get, if you manage to get the retest, that means if we pull back into this trend, we're wrong. So that means your stop loss goes there rather than down here. If you put your stop loss there rather than down here, that's changing it from, just as an example, 5% to 30% down here. So you'd be risking 30%. You potentially could lose 30%. However, this is a support buy. It's got a higher probability of moving. You limited your risk. So that means that the trade's completely better, guys. If it goes wrong, it goes wrong. You're not risking much compared to the 30%, which would absolutely wreck you. Well, it wouldn't wreck you, but it'd hurt you, guys. 30% of anything hurts anyone. Next thing, Cadena, guys. We talk about gaps on Cadena. Cadena's pulled back. It's at its 786. You can see we've had buy-ups at the 786, and we've got a gap here. This gap is 68%. We're at strong support at the gap. This previous build-up of price action acted as resistance once, twice, 3 times. We broke through. What would we do? Expect this to act as strong support. You've got your 200 on the daily now. You've got your 200 daily moving average to fall back on. You can see the price reacted to this 200. We've got a wick to the upside, regain the 786. Do the same here, guys. Trend line. Stick your trend line on there. Once you've got a break, bulls have got momentum. You know where you're putting your stop losses. Protect yourself with a limited amount of capital possible. And then you can ride the 68% move to this previous resistance level. Solana next. We were looking at Solana, and we talked about Solana in crypto class, actually, guys. Go back and watch last Monday's crypto class on support and resistance and how you can apply support and resistance with ease to any of your charts. Give yourself an edge. It helps you know exactly what's support, what's resistance. At resistance, you're taking profits. At support, it's a good place to enter. So by adding these simple lines on your chart, that can give you an edge in the market. So we were talking about Solana, and we said this. We breached the previous, not the previous all-time high, we breached the previous local high, and then we've come back down, and what's happened here? Come back down, and that previous resistance has now flipped support. It's not only flipped support, it's had a bounce and it's had a reaction. It's had a positive bullish candle on the 618. See this, guys, this is when a bearish candle becomes bullish. See, it's a red candle, so you've got your open, and then you've got open there, you got your close there. So it's a red candle. However, that red candle at some point went all the way down here, and then the bulls managed to push it all the way back to this level here. So the bulls have regained the level. So that's when a bearish candle becomes a bullish candle. And then finally, Cosmos, Atom. So what have we got with Atom? 382 sat all the way up here. This is a 382 from its previous bull market high. And that is sitting at a whopping 200% from where price action is now. When we delve into local price action, there's the swing low, there's the swing high. We've come back down. What have we hit, guys? What have we reacted from? What have we respected? The golden 618, time and time again. Tested this as well, the 200 moving average. You can see that's a big buy-up candle there. So a little bit different on this one. You can add a diagonal on there like that. Wait for the break. However, we've got a key resistance point here. This key resistance point is sitting $7.18. It's that 0.5 level. So we got rejected once, twice, 3 times at the 0.5 level. So we know that the 0.5 level works. So if we got something like this, a break, we've got something like this, which is a break, got rejected at this level, come back down here, that's a support buy after you've had a break. That's giving you more momentum. That's telling you can reduce your risk by having a stop loss here, or even below the 200 if you want to give yourself a bit more security. And then it helps you with risk management, guys. These little tips, these little tricks help you with risk management. So I'm going to be continuing. We've got crypto class again on Monday. We've got news events on Friday. And I'm going to try and do an update on Cardano within the next couple of days as well, guys. So subscribe to the channel, join the Discord group, join me on my journey now, guys. It's getting close. See you in the next one.